So I'm a news junkie. Growing up, it was a big deal when my parents not only got the hometown newspaper, but they also subscribed to the big city newspaper in the next big town over. So this is something that I've always thought was important, right? You read about, what's going on locally, and as an economist, one of the things that we think about a lot is the role of newspapers in disseminating information about firms. And the market learns a lot from these type of outlets. And so as a news junkie and an economist, it was, fun to kind of bring these two together and see what kind of effects we observe in markets when newspapers start to shrink and investors lose this avenue to learn about firms, learn about their investments. Growing up, my grandmother always used to tell me, you don't ever want to do anything that's going to land you on the front page of the paper in a bad way. And I don't know if everybody's grandma told them that, but I always thought that, if the local newspaper closed down, then that's one less threat, right? Grandma's friends aren't going to read about you. So as a cynic, maybe we went into this research expecting more aggressive behavior out of managers, but we actually find that they don't take advantage of the absence of newspapers to behave more aggressively and commit more fraud or pay themselves higher wages. We actually find that when newspapers close down, these firms respond by just disseminating a lot more information.
Yeah, like as Roger said, I expected companies being more opportunistic, but the results were opposite of what I thought. So companies being more transparent and become more investor friendly. So I was really surprised that companies voluntarily become more transparent by providing more information to investors. And another our finding is instead of piling up money inside of company, just companies distribute more dividends to shareholders. So that was another interesting finding.
The type of firms that we expected to be most affected and that we actually find are most affected by the closure of newspapers are firms that have their operations centered around that newspaper's location, right? So it's not these national firms or international firms that we see being affected, but if your Phoenix area firm, for example, and a Phoenix newspaper closes, that's the type of firm that we actually see really ramps up their disclosure and changes their behavior in the aftermath of a newspaper closing down. So we thought it was kind of neat that that's where we see the action in our results. When these really important and long-time players in the news environment disappear, there's a gap, and there's a gap that isn't being filled by the internet, it isn't being filled by TV reporters, isn't being filled by people live tweeting, information about these firms. That newspapers play an important role, and I think the bottom line is that if this industry continues to decay, we're going to see continued negative outcomes for different actors that maybe don't even think they rely on newspapers, but see the quality of their operations or the quality of, say, name recognition that they receive degrade with the continued decay of the kind of classic traditional newspaper industry.